This is Rick Rule for Rule Investment Media, sponsors of the Natural Resources Investment Symposium in Boca Raton, Florida. I'm delighted to have with us a new guest, Matt Piepenburg, spokesperson now for Matterhorn Asset Management. Well, Matterhorn is well known to me as a consequence of their great contributions to the precious metals debate. Matt, your organization is better known in Europe than it is in North America. Perhaps you could begin by giving us an overview of Matterhorn, what they do, what services they offer, and why they've chosen to grace the Boca Raton Natural Resources Investment Symposium.
Of course. Yeah, as you indicated, Matterhorn Asset Management, goldswitzerland.com, is based out of Zurich, and we've been there for over 2 decades. It was founded by Egon von Greyerz, who's an iconic figure in the precious metal space. In 30,000 feet and in kind of an elevator pitch, I mean, Matterhorn effectively is the largest private gold service for storage and liquidity brokerage service. We buy most of our gold through the refiners that are in Switzerland, but from anywhere in the world we can get it. But we store it in one of the safest private vault in the world, and that's based in an undisclosed location in the Swiss Alps. But we also have vaulting locations in Zurich and in Singapore, and frankly, anywhere else in the world where our clients would like to store their gold. We have a strong conviction and bias for Switzerland as a jurisdiction. Most of our clients are fairly sophisticated in the precious metal space. We represent clients from over 90 countries. A lot of them come from the U.S. because we believe that gold should be stored outside of the jurisdiction of your domicile, so to speak. But it's really about focusing exclusively on precious metals. And we are coming to Florida in the U.S., obviously, just to expand the message that our service, though based in Zurich and based in Europe and based in Switzerland, is really an international service. And we want to bring more awareness to what we're doing there. I think the model that Egon von Greyerz founded over 20 years ago for his own family and friends and their funds, and he was buying gold when it was at 300 an ounce. The model of having gold storage outside of a very fractured banking system, having it privately held in very safe, secure vault locations, and really focusing on physical metals is a model that has stayed the test of time and will continue to be an aggressively intelligent model as things continue to kind of fracture globally and nationally. So it is, as I'd like to say, we run a hole in the ground and we charge rent for it. So I'm an insurance salesman for currencies that are dying on the vine, and I'm charging rent for holding that precious metal, that gold in particular, in a very safe vault.
Well, I'm delighted to hear you describe gold in terms of its insurance function as a portfolio, which is the principal reason that I buy it. I'm in the odd position of owning a lot of it and hoping it doesn't go up a lot in price. The circumstance that causes it to go up in price is, of course, not pleasant for the rest of my portfolio. So let's talk about some of those things. Let's talk as an example about dislocation in the global currency markets and why that dislocation, particularly dislocation, I guess, around the world's reserve currency, the U.S. dollar, but also the euro, might want to cause people to hold gold.
Yeah, to your point, wealth preservation is our focus. And Egon and I always joke, be careful you ask for. When the gold price really starts to rise, the rest of the world won't be in such a good place. And we don't mean that smugly. We've always looked at gold as a preservation asset, as a constant. As currencies historically lose value in a fiat world, gold continues to act as a constant. You've said in the past about silver that silver rewards infrequently but extravagantly. And gold can do the same, but we're not looking for the extravagant reward. Our mindset is protecting wealth that's already been made. Most of our clients agree with that. Of course, the gold price matters. We look at it, but we don't look at it with an anxious focus because we have a general historical and mathematical loss of faith in fiat currencies in general, and the U.S. dollar, even the U.S. dollar in particular. And to your question, the dislocation of the dollar, I've written and talked about a lot since March of 2022 in particular. You could go back to 1944 when the U.S. dollar was a gold-backed reserve currency, and there was a seismic change in 1971 when Nixon took that chaperone away and allowed for unfettered creation of the U.S. dollar. I think the greatest watershed since 1971 was March of 2022 when we weaponized that dollar. Regardless of your political views on the war in the Ukraine, which is naturally a debatable issue, even John Maynard Keynes warned not to weaponize a world reserve currency. Economists in the 1960s warned against weaponizing a world reserve currency. Even Barack Obama warned against weaponizing the dollar against large nations, and he said that in 2015. So there's clearly been a disconnect between Obama, John Maynard Keynes, and the current administration. I can understand the headline appeal of taking a country like Russia off SWIFT or SDR access or freezing their FX reserves. But when you're messing around with a country like Russia, which is closely aligned, obviously, with BRICS and with China, and you're weaponizing that dollar, it creates an obvious scenario where countries like Russia and China and BRICS plus nations have now the perfect pretext not to de-dollarize and destroy the dollar overnight and end the world reserve currency, but to choose other settlements, bilateral agreements outside of the US dollar. And that is a slow process, not an overnight process. But the BRICS aren't a laughing matter. They're over 50% of the world population. Their share of global GDP has been rising, while the G7 share of global GDP has been falling. And at this point, the global share of GDP for the BRICS is surpassing the G7. It's not a trifling matter when countries like the BRICS are finding opportunities to reach settlement systems or trading systems outside of the US dollar. It's not a laughing matter when Saudi Arabia is fist pumping Biden, but shaking hands with Xi and talking to other countries about possible petrodollar sales or petrol sales outside of the dollar. Again, this is not happening overnight. This is not the end of the world reserve currency. There is synthetic demand in the derivative markets. There is synthetic demand for the dollar and in the euro dollar markets. There's obviously a huge role is the reservoir of currencies over 60% and 40% of debt settlements. So the US dollar is not going away. It's simply changing. And we saw last year an historic dumping of US treasuries because of a lack of faith in the US ability to control inflation down the road. I think at some point, the US is going to have to choose between saving the system and saving the currency to monetize its IOUs, its US treasuries. I think the world knows that. The futures market knows that. The oil futures market knows that. The Eurodollar futures market knows that. The risk asset markets know that. Whether or not Powell knows that yet is to be determined. But I think even the Fed realized at some point they're going to need some type of demand for those unloved, unwanted US treasuries. Despite the synthetic demand in the system, there's going to be a point, I believe, where the Fed will have to monetize even more to keep the US Treasury yields from spiking too high and to control that bond market. And so that will involve the multiple creation of more fiat money, which will be in the end game highly inflationary, which goes to your point about the US dollar. You have a dislocation in the world post 2022 in March, and you have a weaponized dollar in addition to a dollar that's going to be needed more and more to sustain the US Treasury market, in my opinion. And so all of those things will slowly and surely and steadily reduce the purchasing power even more of the US dollar. And you know as well as anyone that since 1971, that watershed moment when Nixon welched on the world reserve currency of 1944, that the purchasing power of the US dollar, like many major currencies, like all major currencies, has sunk significantly, over 98%, when measured against real assets like a milligram of gold. So to us, it's not even being a gold bug. I think it's a cheap term. I think it's being a realist. Maybe you could call it gold bear or gold bull, excuse me. It's just understanding history and the cycles of fiat money and the cycles of bad monetary policy. Those all rivers and arguments and threads point towards physical gold as currency insurance for a country that's over its debt, over its skis in debt. And at a crossroads where, again, they'll have to choose between saving the system, the bond markets and the risk asset markets and the banking system, or killing the currency or neutering the currency. And I think the ultimate victim will be the currency, as always, that falls on the sword.
It would appear that the central banks around the world increasingly share your point of view. This is an interesting development from my point of view, because in effect, the purchase of gold questions the value of central banks. Yeah. And in effect, they are buying an asset class that's a protest against what it is they do for a living. I mean the central bank's criticism of gold has always been that it's an inert asset, a pet rock. By the way, with regards to gold bugs, I am one. But let's move on from that.
Probably so, yeah.
The fact that people are now central banks are willing to buy gold, despite the fact that it doesn't pay a yield. Do you think that this goes to a fear of dislocation, or do you think it goes to the fact that the yield that you get paid isn't a real yield, in the sense that the yield that you get on government securities, irrespective of the printer, be they euros, New Zealand dollars, US dollars, whatever, is less than the deterioration of the purchasing power of the currencies? Do you have any feeling about the economics, if you will, of central bank gold purchases?
I think it's a very important point. The implications are amazing. They're massive when you see what happened in 2022. In the 50 years that they've been measuring central bank purchases of physical gold, it was a record year. Gold purchases up 156%, 1,100 tons of central banks, largely Eastern central banks. What were the reasons? As they were stacking physical gold in the central banks at historical levels, they were also dumping U.S. treasuries at historical levels. So this interesting yin yang of selling U.S. sovereign debt while purchasing physical gold, I think it has to do with two things. Yes, it has to do with the dislocation issue, and it has to do with the idea that risk-free return on Uncle Sam's IOUs is really return-free risk when measured against inflation. Regardless of how it's printed or not, you're simply getting a negative return. In my opinion, if you want to get technical, a negative returning bond is technically a defaulting bond. But nevertheless, I think central banks are seeing, and the world is seeing, especially as we tilt east, that eventually that U.S. dollar and that U.S. Treasury is going to be more and more debased and diluted. And so it's not a coincidence that as they're dumping that IOU at large levels in 2022, they're buying at historic levels physical gold. They're positioning themselves where the hockey puck is going to be years, months down the road, not where the hockey puck is now. I think if you just look at those two classic movements, the sale of treasuries and the purchasing of physical gold, even if you just look at things as innocuous as who's meeting who in what parts of the world, who's conducting peace conferences, who's having financial meetings, what countries are they going to, who's meeting who's fist pumping, who's handshaking. The world is changing. The U.S., in my presentation, which I'll give in Florida, is about comparing the iconic America, what it was, what it stood for, what it still in many ways is. I'm still very much pro-American in a lot of ways. But that iconic America and the reality of the debt reality of current America are two very different things. The world of Elvis, McDonald's, Martin Luther King, Marilyn Monroe, Hollywood Boulevard, the bull and the bear on Wall Street, the flag on Iwo Jima. There's many things that I'm very proud about America. But if you look at America's debt to GDP, its declining tax revenues, its declining productivity, and its rising debt levels, these are very scary things that have to look under the hood to really see. And it kind of sadly takes some of the shine off of that iconic image of America. And I think, to your point, the selling of treasuries and the stacking of gold by central banks is a symptom of that recognition outside of the U.S. of where the dollar and the debt levels are going. And again, gold answers that question quite historically, elegantly, and naturally.
Well, Matt, your firm, Matterhorn, has been an important spokesman for the gold business for a very long time. We're delighted that you will come to Boca to talk about global macro for Americans and talk about global macro, frankly, for all people. And talk about the role that gold might play, not merely in the world, but more importantly, in the portfolios of the attendees to the Natural Resources Investment Symposium. We're delighted to have you. We recognize your contributions to the gold industry all these years, and we really, 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 truly look forward to hosting you in Boca Raton. Thank you for coming.
Thank you, Rick. I look forward to seeing you there.